Hello, everyone. Welcome to Now Next Later for Monday, September 22nd. Thank you, as usual, for joining us live. We love our live attendees. So as you come over from the waiting room, we'll welcome our guest, Robbie Chrisman. The nice thing about having Robbie on as a guest, it's also his network. So we are part of the Chrisman Commentary network. So having the boss man on the show is really exciting for me. Thank you again for joining us. Today's episode is going to be interesting. So we got Robbie live from ACUMA. As everyone in this industry knows, it is conference season, and we're going to talk through a couple of themes. But one of the biggest themes I'd like to hit straight away is what are lenders talking about, and how does ACUMA, in your mind, fit in to our industry? I know a few people there. I got a few texts about it, but we have so many things going on. There's so much overlap between different types of lenders and their needs. I'm just curious, is this all credit unions and then mortgage is a part of it? What's sort of like what's the vibe? So thank you everyone for joining us. Robbie, welcome. Give us a vibe check.
I'm curious why I didn't ask you any of the questions I was going to be asked before we logged on here today. So
I thought you liked it that way.
I do a little bit. So your question is, do you give me a vibe check?
Yeah. Starting with ACUMA, and then we're going to work towards other events. But I want to know.
I would say that ACUMA, well, first off, it's the largest attendance they've ever had at this conference. I think it's nearly 700 registrants. I saw Peter Benjamin in the elevator bank yesterday as I was checking into my hotel. He's head of ACUMA. Ecstatic. They're ecstatic about the conference and the turnout. And I would say that I've seen a lot of non-credit union, non-vendor types here looking to interact with credit union. Yeah, which was surprising to me as well. I'm running into a lot of people I see at normal conferences that don't work with vendors, or sorry, aren't working as a vendor. And so stuff's lively. They had like a UFC Bellator fighter, Christopher Wren, I think is his name, open the festivities. He went 15-2. You call this a win? We can put 16-2 on his record, I would say. Got a dub this morning. But here, I'll give you guys a little tour of this is the exhibition hall. I'd say it's
look at that. A live look.
Good. And the only reason that there's not more people in here is because Rob Chrisman is currently speaking on stage with like Marina Walsh right now in the other room. And so people went back over there. But I've enjoyed it. The interesting thing to me too, as I look out here, is I'm seeing the same vendors that are able to spend for booths at conferences. You can say it's a pro or a con. I don't necessarily have an opinion on it, but seeing a lot of the same companies have booths at these conferences. So maybe that's a sign they're all doing well. Maybe that's a sign that they prioritized conferences for their spend. But yeah, it's been a good conference so far.
That's a good segue because, we're typically talking new products, new markets, and innovation on this show. And one of the things I'm trying to really understand is, are our conferences important to us because that's where we learn about these things? I'm trying to understand, like, how many of these do you have to go to before you hear the same thing? Now, if you're in a booth and you're selling, that's obvious. Your customers are walking around. You got to be everywhere a potential customer is. But from what you said, if you're a lender, if you're a credit union, how much more are we not hearing about? How much more are we not seeing? Like, what are people talking to you about on your road show?
Well, however many you need to go to start seeing the same things, I have exceeded that threshold. I exceeded that threshold very early on this year in 2025. I'm going to flip the question back onto you.
Yeah.
Briefly, and then I'll answer it in the spirit you intended. But why do you, Jeremy, go to a conference? What's worth it? Or what makes it worth it for you going to a conference versus one that wasn't worth it?
Yeah, I think for me, there is a good amount of having a conversation someone isn't willing to have electronically or publicly, but they are willing to have it in a hallway or in a 30-minute conversation one-on-one. And that, at least in my current role, is what's actually going on in the market. And I mean it in two ways. Who's adopting which tools on what schedule? That's the most important thing to me. And then two, who's actually getting bought by who? The next 6 months to a year, we're seeing consolidation speed up, and we're seeing massive consolidation on the real estate side. And typically, when we see something on the real estate side, it follows to mortgage 6 to 12 months later, typically. That's not always, it's two different industries, but as I've said, technology has brought us both closer together. So as I've watched pretty massive consolidation on real estate over the last year, I would expect it would follow. And so that's the second thing I need to know. Who's adopting what technology and why, and who's getting bought and is changing their flag.
Yes, and I would say for this conference specifically, what makes it worth it? Was the original way you intended that question, or was yeah, sure. Uh, as I alluded in my previous answer there, I get tired of the same conference circuit. See the same speakers, see the same people. This has been actually, it's been refreshing to not see so many familiar faces in a lot of senses. And for us also to get a sense of what is the target marketing for credit unions and how does that differ versus IMBs and those sorts of things. Uh, I I think that there's been a big push recently to get into the credit union space. And that's what's shown in the registration numbers that I alluded to or whatever. When it comes to the actual sessions, hit or miss on are they valuable?
Yeah.
What did I enjoy watching a former MMA wrestler talk about his upbringing and why it got him to? Yeah, sure.
Sure.
Is it going to help me? Is it going to help my bottom line or Chrisman's bottom? Probably not.
But I do think those are fun little quirks. If you're going to be there anyway, you might as well hear from somebody or see something you've never seen before. I think, one of the questions I've been struggling with on this show that is interesting to bring to conferences to get people talking is, what can lenders control? And your comment about a credit union is a real catch-22 for technology companies because credit unions can control a lot, actually, relative to a mortgage company. Credit unions can use their balance sheet or their portfolio, or they can securitize and sell loans. Credit unions can do a couple of different things on implementation or pricing that others can't do as a result of that. And then third, they kind of have a closer relationship with their customers in many cases. And so lead gen could look different. Different types of framing of products or services could look different. Super interesting. However, the catch-22 is they also tend to have fewer resources to adopt and implement. Not always, because there are some giant credit unions, but for the most part. So you're really, as a technology company, caught in which type of lender you go after, because if you go after everybody, you have a real sales channel challenge with banks versus credit unions versus mortgage companies. But if you don't go after everybody, you are leaving a decent number of lenders on the table. So
Yeah.
I think the control piece is what's interesting to me for credit unions.
And I would add to the benefit specifically for me coming here or Chrisman coming here is that you pick up little bits of chatter in the hallways. Hey, who's buying who, as you mentioned, or what's going on? How are you selling to this segment of the market? What's been any interesting changes you've seen recently? You can just pick up little things in conversation. Ooh, I heard this rumor, and we run a gossip column at the end of the day, don't we? No, but there's little bits and pieces we pick up where specifically for me or for Chrisman, you can write about it in the daily newsletter. You can talk about it on the daily podcast. You can discuss it if you're speaking at a different event. I know from here, my dad goes to AIM and I go to the National Reverse Mortgage Lenders Association conferences, respectively. I used to pick up little tidbits in the hallways and be able to take those going forward for future sessions where you're speaking in front of other people. And it's nice just to feel like you have the inside track. People come to read our stuff or listen to our stuff because they feel like we're in the know. And so, this helps trying to glean as much as you can from talking to people.
Well, we'll make your dad comment about the AIM conversation instead of putting it on you. But speaking of gossip, there was quite a bit of gossip on AIM this week. So Rob will have to get to the bottom of that when he's on site next week.
We're not going to address any of it here.
We can. I mean, I've noticed that the headline is, "Did you know there was this giant legal battle going on between AIM and Katie Sweeney?" And then did you care, do you care that Rocket sort of adopted the problem by hiring her? And now it's sort of Rocket versus AIM again, even though I thought we were 5 years removed from that. Here we are again, same old story. And so, as far as like industry gossip goes, you're always going to have the top two lenders battling it out. I remember when I joined Quicken Loans, it was Quicken versus Wells Fargo, right? And then after Quicken took number one spot, it became Quicken versus UWM or Rocket versus UWM once we made that change. And so, like, as far as like industry news goes, yeah, everyone loves to know what's going on with the big players and especially hear what's going on with top personnel or very high profile people. I just don't know, like, is that worth going to conferences for? But not not that much changes. I guess my point, Robbie, was like we do a lot of conferences and not much changes. So, like, do we meet more than every other industry? I don't know, but it sure feels that way. And so, like, the question I would have is like, as I think about what's next for this industry moving from now to next, is like, we should probably have more meetings. And on what? Like, what are
Yeah.
we going to talk about in October in Vegas when MBA convenes the whole industry? What, like, we're going to talk about AI?
Well,
Like, we're
I'm
gonna,
gonna say that what's old is new again, sort of thing.
okay.
Yeah, I do want to talk the Katie Sweeney drama because that's so fun. We love some hot goss here. We love spilling the tea. But
Please do.
I'm sure you, Jeremy, king of kitschy objects, have like this meeting could have been a phone call or something like that type of coffee mug that you sip on in the morning. I would argue that a conference is value, the in-person conference in the mortgage industry is valuable in ways that a Zoom call or a phone call or an email chain could never beat. And so it's nice to see companies embracing this, people out here, people excited to be part of this. And I think it is really valuable. Are you an MBA skeptic, like MBA annual? Are you going to be there? Are you boycotting it?
Oh, I'll be there. I'm just trying to understand how to use the time effectively for myself. But more than that, I'm kind of poking around for the do you go with a specific intent or is it fear of missing out? So I don't go with a specific intent, but I don't want there to be some information I didn't get. And so I go without an intent just to make sure that I heard everything and I may or may not come back with something valuable. I think for a lot of lender executives, that's what it is. I think it could be with specific intent, but I think that happens behind closed doors with MBA committees by and large, and not for the general participant member. But I'm asking those questions as I get more visibility into like who's going where and why and how. And we all had the same conversation a month ago, which is like, where will I see you when? Okay, we'll cross paths there. And so I just wanted to make sure that like I really understood why people are doing this because it does take a lot and
Dare,
we don't seem to change much.
dare I ask you what your favorite conferences over the last year or two have been and what made those spectacular?
Oh, yeah, right on. For me personally, I just got back from my favorite conference of the year, which is Blueprint 2025. Blueprint last 2 years has been a convening mostly focused on investors in prop tech. They define prop tech as the built world, meaning what's actually happening with real estate, not financial tools or fintech products mostly. Actually, the management of home, whether that's home ownership, whether it's commercial real estate, multifamily. So it's kind of cool to have an environment where investors, startups, and strategic companies, big established companies, are all interacting across single family residential, multifamily residential, and commercial, and like learning from other people. I was never before this, I was at very few mortgage companies or mortgage conferences, I should say, where we talked to anybody outside the industry. So everything we learned from vendors because they were doing it with somebody else tangential to us. This conference is like, let's talk about how this tool could work over here. Did you know that this is what they're doing in condos or townhouses that could actually really affect single family houses? And so I like that piece because I'm just trying to push the industry forward. Um, But that also is a gamble. It's a gamble. There wouldn't be a reason for a mortgage company to be there because their customers, the real estate agent or their servicing portfolio, those are their customers. And without those two being there, why do they need to be there?
Yeah, and that's probably more of an altruistic approach than I will take on this. I actually had a really good meeting this morning with a company that sells kind of like Zoom office type software, but the mortgage industry is just one of dozens of industries that they sell to. And it was really eye-opening talking to them about how can we, our marketing platform at Chrisman properly cater to your needs, slash, what are you seeing? How are you seeing success advertising in other industries? How can we bring that into the mortgage industry? How can we serve you, somebody that this is only one of the few silos or one of many silos you engage? It was an interesting way for us to rethink about how maybe we want to do our 2026 sponsorship kit. I don't want to lose the question though, and that is good conferences. I'm going to throw you a bone. Michigan Mortgage Lenders Association, MMLA, my favorite conference I went to this year. And I think a lot of it had to do with the way the days were structured. They started with Captain Phillips as like the keynote speaker. Boom, you come in, keynote speaker, get everybody kind of like rah rah, jazz them up, sort of thing. It's a cool story. They're enraptured attention wise. From there, break, immediate break, let people go, let people decompress, go do the thing, come back. Two like bang bang short sessions, lunch, one session after that. And these were all valuable sessions, whether it's tech adoption or I should go back and look at the MMLA schedule, but I really enjoyed all the
I
stuff.
hear you.
I thought they were all good sessions. Tech session, market update, what's going on in capital markets, those sorts of things. Finished by 2:30. Nobody is tired. Nobody is dragging by the end of the day. People had a good time. And then they had specifically for this one, pretzel making in the afternoon, which was very on point with the Bavarian theme of the whole conference in Frankenmuth. But I thought the condensed schedule, the breaks, the way that they ordered it was so good. I attended a conference. I guess it was a sales rally for a bank last week in the Pacific Northwest. And they were 9 a.m. to 4:30 p.m. every day, very few breaks. And I was just watching people's eyes toward, in the afternoon, it's like dozing off, wanting to take a nap, you know, and that gets into a whole different thing of do you do it in one room or do you have several different rooms, that sort of thing. I'm a fan of one room, but if you're going to do one room, you can't have people there all day long, sort of.
Yeah.
And so,
And also like how provocative the presentations are does matter. If we're being very careful and can't say anything all the time, then it's just going to keep getting more and more of that glazed over look. But I think there's not a lot of incentive for a lender to get on stage and say, here's what I need help with. Here's what we still can't solve. But everybody who watches this show and everybody who pays to exhibit or speak at an event, that's really the question they care about. What are the things that lenders are struggling with, and what are the things that lenders would pay to solve? And so I've been working on a theory for now, next, later that I'm refining, but I'll fly the theory out there now because it's relevant to these conferences, which is outside of the top 10, mortgage lenders don't control their own destiny. Fannie and Freddie control access to data and approvals and pricing, and your POS, LOS, CRM, point of PPE, maybe your closing partner, but I wouldn't even put them in that list because that's not really that relevant, apparently, to lenders. They don't care how loans get closed, remarkably. So your four vendors, POS, CRM, LOS, and PPE, control what you can do. And so unless you have capabilities and technology that are yours, you don't control your own destiny. So you go to these conferences, I think, not to miss out on a deal where a vendor's rolling something out that you can adopt, but those are your choices. And so I've been trying to figure out how to crack that code and make people incentivized to adopt consumer-facing tech. But
and you also argued earlier in the show that credit unions fall into that thing where it's like you can't tell a credit union what to do. Correct? That was your.
Well, I think credit unions struggle because they have the best opportunity to do stuff and the least sort of resources and experience trying it. So they really don't do it, even though the landscape would suggest that they have the most control.
So I remember interviewing for a credit union, a
Uh-huh.
secondary marketing job in a credit union. Might have been running their lock desk or something like that. And I said, dude, how many takeouts do you have? And they go, two. And I was like, do you want to expand? And they go, no, we're pretty happy. And
Yeah.
in the historical knock against credit unions is like they're pretty set in their ways and they feel like they're giving their members enough value where they don't need to quite adapt. I I would all go I would also argue that a lot of that has changed in the last couple of years where credit unions are now saying, hey, what is the tech that we can adopt? What are some changes to our workflow or our takeouts on the back end or whatever it might be to be able to work some of these advantages for our members? Because if you look at the larger mortgage ecosystem, there's huge recapture wars right now. I'm calling it recapture wars. You want top of the funnel? Go buy a Zillow. You want end of the funnel? Go buy a servicing book. Go buy a servicing. All these IMBs are trying to find ways to get some of the advantages that depository institutions have. Well,
That's a great point. That is a
capturing a
great point.
customer for the length of the life cycle. An IMB can't do it. They can't offer multiple products. Credit unions can double down on it. Go ahead, say something.
I no, no, no. I think this is a great point because this is a caveat to what I just said about what mortgage companies control. They do control the number of investors they sign up with. So where that credit union had two takeouts other than their balance sheet, unless the balance sheet was one of the two, the I talked to an IMB CEO who had 35 investors. So that's Fannie and Freddie, FHA, VA, USDA, and then like 30 non-QM slash whatever investors. So you do control that. That sounds like a nightmare to me because those products are not that different. But if each branch manager or loan officer who's a big deal wants something or needs five or six of them to get stuff done, self-employed, this and that, then you're going to end up with that. So you do control that, which could be a slight product differentiator for your LOs, but I don't think there's any way to take full advantage of it. I think it's more costly than it is beneficial because you can't really show a customer or all your LOs how to use it. Your LOs like use two or three, and that's
Mhm.
about it. So, offering mortgage companies some more dynamic capabilities for products that banks already have or for relationships that banks already have, I do think is important. I do think we should
Yeah,
discuss it, but I
it's
don't think it does what we think it does on the
well,
mortgage.
it's perplexing to me that these depository institutions, and I'll single out credit unions in general, since I'm here at ACUMA, haven't drilled down more into that advantage. Haven't been a little more ruthless with look at our cost of funds. Look at all the different products we can offer. Look at the ways that we can get a customer to be, work for us and I'm stumbling here because it does boggle my mind that there's like been this complacency amongst credit unions specifically of like business is good enough. What do I need to do more?
Yeah.
I don't need to offer better rates. Like I already have them as a customer. They're already tied to me in these ways. And I guess I'm optimistic here that we're starting to see some of that change. And I think based on the exhibitor hall, based on all these companies I see exhibiting,
Yep.
tech vendors are taking notice that there's some low hanging fruit out there that can really make a difference for these credit unions or other depository institutions.
I think then it goes back to this last question that you've posed, which is if that's true, and I like it, so let's posit that it's true, then it really is going to become a race in time to when you connect to the lead
Yeah.
because there are only really this refinance option, to your point, is quickly being consumed in a real way by servicing books and anyone who's bought a servicing book. And in fact, the way public data sources work, you can pretty much even get to a credit union loan and try to refi it before they realize it if you're moving fast enough on certain data points. So that kind of leaves purchase as the opportunity for a lot of loan officers, only to find out that there's also an arms race in purchase to get to the top of search, to get to the top of proactive apps and tools where mortgage gets offered straight away or with an incentive. So if you're a mid-sized credit union or a mid-sized mortgage lender, the race is on and you can only get there with technology companies. And even then, this is why I said consolidation's my theme for MBA annual. I just don't see it. I don't see how you could do it.
Yeah, there's a weird push and pull right now for me of the like, hey, refinance is not a reliable origination stream. It's very rate dependent, those sorts of things. However, technology is so good in the refinance space. I can probably reduce my cost to originate a loan or get rid of the LO comp portion of it, pay them pennies on the dollar because it's such a simple thing, because I can get it through the technological comfort so quickly. Then that now could be my focus, because that's so much more profitable than trying to, work a lead with a customer on the purchase side of things. Pay an LO big bucks to handhold somebody through that process. Like, yet the purchase stuff is what's going to be more reliable and what is kind of the bread and butter of the industry. It's almost like this, like I said, this weird kind of push and pull. Where do you devote your strategy to? Do you want like easy refis that flow through, but maybe they dry up, or do you want to focus on a costlier purchase and try and play these games against some of these really big institutions out there?
The theory I've been playing on the refi for either servicers or anybody who wants to be in that space is I think it is a quarterly or at the most annually, but probably quarterly touch point with a consumer where you're actually asking them, do you want to stay in our program? Well, we'll proactively serve up opportunities to you as they come. And you kind of create this feeling just through your CRM and technology that says my product and pricing engine can cast rates every minute of every day across my whole portfolio and tell me exactly what the pricing is, exactly what the equity position is. With a little bit of real estate data, I can tell Jeremy Potter where he is on today's rates in an equity position for whatever. And if I say to me every quarter, do you want to stay in our program? Then now we have a data relationship. We're going back and forth. So when it hits that morning, said, hey, by the way, we hit your goal. You set your goal 6 months ago as $800 a month savings. We just hit it. Do you want to just go? I think you are actually, when you get that person in your book, if you have it set up right, you're actually originating refis on them for the remainder of their time in the house. If you do
The
it,
flip, the flip side though is companies are not doing it right. And I actually spoke
yeah,
to a guy from Ardley this morning on my daily podcast saying, and it was looking at FHA streamline
yeah.
refinance. Companies will say, yes, time to hit up the bar where the prevailing, market rate is 3/4 of a percentage point below their rate on their loan. Hit them up. And then it turns out the borrower says, cool, I like that. Okay, they forgot closing costs. And so when it comes time to actually close, okay, well, the payment you owe us is actually several times your current monthly payment to get this loan closed. Like, so they're creating frustrated borrowers, and there is like, it's not quite fully there yet with,
So that
yeah.
everyone should go out and find Ardley's white paper.
Yep.
Nate Denherter wrote about this FHA escrow problem. And really the thing that Fannie and Freddie can do that FHA can't is finance the escrows in to right size the insurance and tax payment over the next loan, because you cannot do that at FHA. You look like you have savings until you get to the CD, and you cannot right size that. And then you get boxed out of being able to close that loan, even though that person theoretically could save money on their rates. It's the escrow timing that messes up that deal. So everyone definitely go check that out.
Yeah.
Think
Thank
that's
you
a
for
great
explaining
point.
that. You
Of
explained that
course.
much more eloquently than I could. So
It's all
Jeremy,
good.
we are a fan of punctuality here
Yes.
on the network, maybe not on this show. We got 1 minute left. Bring this all together? What is the later that we're going towards with what we talked about today?
We just talked about everyone getting better on the refi later. I think later is now in that scenario that you just described. You have to be doing that. On the purchase side, bring your LOs to the table somehow with the agent in the listing process. We got to pull mortgage and financing all the way up to the do you want to sell this house conversation, because that's where those deals are going to happen. First time home buyers are not in a power position. We have tried now for years to get them more power. I promise you, with Fannie and Freddie IPOing, they'll have even less power than they had before. This is a home seller market. If you want to do business, you got to figure out how to get your mortgage company into that conversation. That's the thing that may get you to see MBA Annual 2026. But if you don't do it, you won't.
Perfect. What's old is new, baby. I had a great time talking to you.
Always, Robbie.
Yeah.
Thanks for joining Now Next Later. We'll see everybody next week. This will go up on YouTube. Please share it, and we'll be back next week with more content.